Good morning, traders. Let me know in the chat if you can hear me. All right. If you are new to the stream and you don't know what you're looking at, my name is Charles Gough. I come from a community called Pirate Traders where we are focused on the ES, the NQ, and how they move through the two-way auction process. So what we're going to be doing here today is we're going to take a look at the ES and try to make predictions about it, where it could go today and this week. And we're going to use the information available to us to do so. Okay. So to start things off, I want to zoom out a little bit and try to give this market some context. This has been an extremely choppy market, choppy on every possible time frame, no matter how you look at it. Choppy intraday, choppy from one day to the next, choppy from 1 week to the next. We've just been all over the place. And when you're in a market like that, a market where everything is just up and down and up and down and up and down and all these complete reversals, it's really hard to have an edge. What do I mean by an edge? I mean having some sort of advantage where you have a higher probability of success than failure. Right? And in a market that is this chaotic and choppy, it's very, very hard to have an edge, especially the longer your time frame. So right now I'm doing what I call taking the market one tick at a time. What does that essentially mean? It means even if in the morning before the market opens, I might be bullish or I might be bearish. If once the market opens, it starts to change and it looks like it's the opposite, I change my mind very quickly and I change my trades very quickly and I adjust to whatever the market is giving me in that moment, because in this type of zone, in this type of range, there just really is so much uncertainty. You have to be like water. You have to change into the form of whatever the market is giving you minute by minute throughout the day. So just the one thing I want to talk about this morning is weekly balance. So the market over the last couple of months has been in what we call a weekly balance area. And you can see that on the chart as this blue box that I drew right here. Okay. And essentially what that means is the market is going to test the lower end. And if it can't keep going down, it's going to turn around and it's going to come back up and it's going to test the upper end. And if it can't keep going up, it's going to come back down and test the lower end, and so on and so forth. Right. And that's what we've been doing. Well, last week we tested both the upper end, then came down and tested the lower end. We broke below the lower end, but then we turned around and came back in again, all in 1 week. And so what does that tell us? That now the highest probability is that we are heading back up to that balance area high. Okay. Just like a month ago when the market got below that balance area low and came back in, where did it go next? Up to the opposite end. That same thing is now true for this week. It increases the odds that we're heading up to that opposite end. But I would not recommend getting into a swing trade right now and targeting all-time highs. It's just so choppy. It is so messy, what we're seeing, that this signal on the weekly time frame is nothing more than one data point to take into account. We're still going to need to see multiple other data points day after day, intraday, minute after minute, to kind of tell us that we do have that momentum up before we're really willing to go long the market. Okay. So what are our signals intraday? Well, on Friday, what the market did was what we call an elongated profile. It opened, it pushed higher, it brought in volume, and then it pushed higher again, and it brought in volume, and it pushed higher again, and it brought in volume, and it pushed higher again, and it brought in volume. And then at the very end of the day, it pushed higher again. So what does that mean when we have that elongated profile where it just keeps pumping and pumping and pumping and it never dips back down? That's telling us this market has a lot of momentum, likely enough momentum on Friday that we can keep going up today. So seeing that elongated profile is bullish for today. What's the other thing that stood out to us about Friday? The spike up. This last little move higher in the final hour of the day is a very important signal. That's what we call a spike up at the end of the day. That implies that this market was so desperate to get long, they couldn't even wait till next week. And so that is also bullish as a carry forward. The interesting thing about a spike, though, is we have a very exact way of knowing if we should see it as bullish or not. And that is very simply, do we open above the base of the spike or do we open below it? So we've still got 25 minutes before the market opens. We cannot make a call about this right now. This market could easily still open above the base of the spike, open above 69.41. If it does, that means right from the opening bell, we are bullish the market. Okay. Right from the opening bell, we are assuming that this thing is going to go up at the very least to test Friday's high, but honestly, much further if we get new buying up there. And if we open below the base of that spike, if we open below 41, we're looking for a choppy sideways type of day. Okay. Now, if we do open above 41 and we're bullish right out the gate, what do we expect to see? We expect to see that area right there around 41 hold as support. So let's say we opened at 51, the market started to come back down. We'd be looking for a bounce around 41 to keep the market going higher. If we open above, we're bullish. If we hold the base of the spike, we're bullish. And we assume that this market is going much higher. That being said, unfortunately in these choppy markets, there's always some bad news with all the good news. We left behind a ton of weakness on Friday because we never dipped back down. It literally one time framed all day, right into the close. So, or pretty close to the close. Let me look at that. Yeah, no, right into the close. It one time framed all day long. So it never gave the market a dip. It never put the market on sale. It just kept pushing the market higher and higher. That creates an imbalance, right? That creates a need for the market to dip back down. And yes, it did dip back down in the overnight, but we needed to dip back down in the regular trading hours. So if they open above 40, we're bullish. But if they cannot hold that as support, we're looking for a move down at the very least to 69.21, but probably all the way to 69.14. Here's the important thing. Just because the market comes down this morning and starts repairing this weak reference does not mean it's bearish, right? We can't forget that we had that elongated profile to the upside. We can't forget that we had that look below and fail on that weekly balance area. Everything is bullish. So if the market comes down to 69.14 today, it might just be to repair that weak reference. It might just be to put the market on sale so that discount shoppers can step in and take this market higher. So if we do get bearish this morning, because we're starting to come down here and repair these weak references, we are only bearish to get to 69.14, not beyond it. For us to be bearish beyond that, we need to see a lot of new selling down there below 69.14. So a very simple way to look at the market, if you want to make things ridiculously simple, is you could say it is bullish above 41, it is neutral between 41 and 14, and it is bearish below 14. Okay? Those are your zones to pay attention to. I don't think we're going to get a massive sell-off today. I really don't think we're going to come back down for yesterday's opening price. Why do I say that? Because of that elongated profile. Because if the market needed that big of a dip, it should have gotten some kind of dip on Friday, right? It should have gotten some kind of pullback. And the fact that we didn't, the fact that we have that elongated profile tells me this market wants to go higher. So like I said, do not be bearish beyond 14 unless once we get down there, we get new selling. That is what I mean by take it one tick at a time. Any questions on any of that from the chat, who hopefully heard everything I said? Good morning to 230. Welcome. Mark is here. Trevor in the house. Griff is here. Happy Monday to you. Pedro says, Charles, I want to be part of your course today. May I have a coupon code? You were sharing? I don't remember it right now. Yeah, you can use the coupon code BRIGADE to save 10%. And if you are thinking about signing up for the course, it starts today at 11 a.m. So if anybody is thinking about signing up, make sure you sign up literally right now, because I will only have a small window of time between 10:30 and 11 to send you the email to join. So sign up sooner rather than later. We'd love to have you. It is not too late. If you're interested in learning more, head to marketsandmind.com and you can read about it there. You sign up and it'll take you to the page. on the Pirate Traders website. You get signed up. I will make sure I send you that email to join the call today between 10:30 and 11. Okay. If you can't watch the streams live, the course live, you can always watch the replay videos. So I'll start posting those replay videos so that you can go back and rewatch after the lessons are over. ET says, great stuff. Should be 50,000 people here. Dude, story of my life. Story of my life. I click on some random, YouTube streamer talking about markets who has, 5,000 people watching their stream. And I listen to the stuff they're talking about and I'm like, oh man, this person has no idea what they're doing. But they got 5,000 people. The blind leading the blind. But what can you do? If you are watching this in the Discord right now, if you have any questions or comments that you want to make, you can head to the Futures-Charles tab, and I will answer your questions there. Dan is hanging out. Good to see you. And Trader, welcome, welcome. Laura in the house. Thank you for the thumbs up. If you have not pushed the like button, please do so. So no questions from the chat. What are we going to do for the next 20 minutes, you guys? 20 minutes. Another thing that is worth noting that I'm seeing here on Bookmap, this will probably disappear right now. I would say, probably around 9:15, but we have these bracket bots. So you can see that there's some sort of computer program that is just keeping the market sort of bracketed by putting these large nodes of liquidity above and below price. And you can see that as price moves, tick for tick, as price moves up or down, so does that liquidity. It moves with price. So these are not real orders that are trying to get filled. This is just some computer program that's essentially trying to throw off all the other computer programs by throwing this liquidity in here. Lately, this has generally been gone before the market opens, so I don't assume it's going to matter. But if that is still there when the market opens, it'll be worth a discussion for sure. But like I said, I imagine probably in about 2 minutes, it's going to disappear. SW Haley, you said it, not me, but I concur. Good morning to Brian. James says Super Bowl hangovers. That could be the case. And let me just tell you, as a person who is now officially a New Englander living in Massachusetts, yesterday's Super Bowl was deeply frustrating to watch. For years and years, I have not cared about the Patriots. And now that I moved to Massachusetts, I finally care about them. And what a game to just watch them get hammered. Heart Medicine in the house. Good morning to you. Mr. Init says, may I ask what those green and red numbers on the Bookmap chart are? That is a great question. So right now, those are icebergs. So this little symbol that you see next to it, that's what tells you it's an iceberg. I guess that's supposed to look like an iceberg. Imagine the water line is like right there. So that's the iceberg. And basically what is an iceberg, right? Essentially, it's just a way for market participants to hide their orders. So if you think about like an iceberg on the water, you see a little tiny bit of the iceberg above the water, but most of it you don't know. It's hidden below. That's what they do with these iceberg orders. So they put one contract in. Let me just zoom in here. So they put one contract in Okay. And then as the market pushes up into it, the very second, and these things work, in a fraction of a second, they work so fast. The very second that contract fills, they add another, and then that fills, and they add another, and they add another, and they add another. And they just keep allowing contracts to fill until they've gotten whatever size they want. We, of course, have no idea how many they're going to fill. We just know that they're adding more. The software just recognizes when one account is adding another contract and another and another and another, and it recognizes that's an iceberg. And so what it'll do is it'll put this red line that you see right here. It puts that there as long as there is still a contract there. So this one right here at 69.40, so far they've filled 20 contracts, but they're not done. They still want more liquidity there. And that's important. We want to be aware of that because the market is a machine that is constantly hunting for liquidity. Okay. There's no conspiracy theory to the market. There's no, secret boardroom with the masters of the universe deciding, is the market going to go up or down right now? That's not how the market works. The market is just a mechanism to fill orders. It just wants to fill as many orders as it can, and it will do whatever it has to do to fill as many orders as it can. So what we want to be aware of all the time when we're looking at the market and we're trying to make predictions about where it's going to go next is we want to be asking the question, where is the liquidity, right? Where will the market have orders if it goes there? So one popular way for the market to get orders is stops. Right? There are areas where if the market goes to that area, it knows it's going to stop people out. So for example, if this morning the market were to push up to yesterday's high, which is at 69.66, okay, Friday's high, if it were to push up to there, there would be a lot of stops up there. Who are those stops? Well, the people that went short in the last 5 minutes of Friday and anyone that was shorting over the weekend, right? As the market was pushing up above Friday's high, they were selling. And we know that because we can see the taper in the volume and the time. Do you see how there's less and less volume the higher it goes? Less and less time the higher it goes? So that means the buyers ran out of steam and the sellers stepped in and reversed the market back down. So at market open right now, there's a lot of overnight inventory that's short the market. So what's going to make those people exit their shorts? Right? Let's say the market doesn't want to go up or down today. It just wants to go sideways. A great way to fill as many contracts as possible would be to first go up to yesterday's high and take that level out. Squeeze all those sellers, then come back down. So in the end, it's really gone nowhere, but they've got a lot of orders to fill because they squeezed all these sellers first. They would also get a bunch of people long up here because day traders would get, excited up there. Oh my God, we're going to the moon. They'd start getting long at the highs. So when it came back down, they'd get squeezed too. So you want to know, where are those liquidity traps? Where are those areas where stops might exist? Now you can't see that when you look at order flow because stops aren't visible. Right? A stop by its nature is being held by the broker until the moment that the market gets there. So we don't know where the stops are unless we're looking at market profile and knowing those key levels. But this right here is liquidity that everybody knows, right? Everybody that's got order flow software knows that there's somebody that wants to fill more contracts at 69.40. We can see it with our eyeballs. So what does that do? It increases the odds that at some point today, the market's going to come back up to 69.40. So anytime you see an iceberg that has not completed, that's what a completed one looks like. It closes out. You just don't still have it there, right? You should assume at some point, price is going to want to come back to that level. Now, it doesn't do it 100% of the time. There was an iceberg down near the lows on Friday that stayed there most of the day while the market was pushing up. So I'm not saying it's impossible for the market to move away from one of those icebergs and not come back, but it just increases the odds that you're going to come back to that level. And another thing you want to pay attention to is, let's say, you're watching the market right now and you're thinking it's going to dip down to, say, 69.20. It's going to find support there, and then it's going to turn around and come back up. And so you're getting long at 20, targeting a move back up to 40 because you're like, well, there's an iceberg there. And that's where the market's going to go to fill that liquidity once it finds support, right? Well, if that's the case, you want to keep an eye on that iceberg because they may randomly pull that order, in which case it'll disappear. You won't see it there anymore. And if they randomly pull that order, there's no magnet anymore to need to come back up there. So that might be a reason if you bought a bounce and the market's moving in your direction and then you see that order or that iceberg disappears, to maybe go ahead and lock in profits or start trailing your stop. Or it's a reason to switch and go short. You want to be aware of when those icebergs appear and disappear because that leads to changes in the market. Okay. And then the other numbers that you see on here are the ones with the circle that has that little line in the middle. Almost looks like a stop sign. Okay. That's a stop. What does that mean? That basically just means the software has recognized that a large number of stops have been taken out at that particular area. I have mine programmed to be a very large number. So they have to be taking out like at least 40 to 50 contracts from a single account for me to even see it. Because I just don't care about people getting stopped out for 5 contracts. It doesn't matter. But when you start seeing really large stops getting taken out, that's important data. Okay. So the way you want to think about stops is if a market is moving in a certain direction, so right now it's moving lower, as long as it's able to keep taking out stops, it's going to keep moving lower. So we just took out a bunch of stops right here at around 69.32. Okay. So the question is, as we dip lower, we're now lower right now at 31. Let's say we get down to like 25. Do we take out more stops there? Because if we don't, if we take out stops here, poke lower and there's no stops, the market's done to the downside. It's got to turn around and go back up. Remember, stops are a form of liquidity. It's a way the market can fill contracts. So even if the market isn't really bearish right now, even if it doesn't really want to go down today, it can go down just to clean up all those stops, boop, 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 and then turn around and go up. So we want to pay attention. Are they still taking out stops? Are we still in the boop, boop, boop part? Or is it over and we're ready to turn around and go the other direction? So that's why we watch those stops and icebergs. 7 minutes to market open. Tom says, can you leave the brigade stream going after 10:30? No, I cannot because I'm using the computer to teach the workshop. So my screen will be busy teaching the people in the workshop and will not be available to stream. It's a great week if you've been in the brigade for a while and you have not gotten your own Bookmap login and your own market profile software. This is a great week to get yourself set up. Okay. Ultimately, in the end, you're going to have to trade off your own stuff. I make it very convenient by having mine available all day, every day for you guys to look at, but eventually you will need your own software. So this is a great week to give it a try and sign up for Bookmap or, find some market profile software. Trevor says, what are your high volume nodes? Purple or red settings. So the volume profile that you're seeing over here, if it's the regular trading hours, that's going to be the profiles that are red and purple or pink and white. That's regular trading hours. And the ones that are blue and white, that's the overnight. So the darkest color, the dark red in the regular trading hours or the dark blue in the overnight, that is the top 30% of volume. The pink in the regular trading hours or the light blue in the overnight, that is the middle 40% of volume. And the white on both of them is the lowest 30%. So that middle 40% doesn't really matter to us. What we're focused on are those large nodes, the big ones, the dark ones, and then where the volume tapers off at the edges of the range, because that's where business will take place. If you are pushing down into a large node, for example, right now we're at a large node from both yesterday and over the weekend. So that's a great place for the market to find support and turn around and bounce from here. If it doesn't, that increases the odds that we need to move down towards the overnight low. The overnight low is a great place for the market to take out stops, boop, boop, boop. And from there, it either keeps doing what it was doing all weekend, which is turn around and come back up, or we get new selling there, in which case it's going lower. So the volume profile lets us know where are those areas where the market has done business in the past. We should, use those as areas to expect the market to do business in the future. Large nodes, support and resistance, low volume areas, potential changes in the market, potential momentum shifts. You can also see that on the Bookmap chart as well. So you can, I have it set up so it's just showing us the current range, but you can set this up to show you the volume profile for any amount of time that you want. Four minutes to market open. Alios says this algo band is here for around 75 minutes, 8 a.m. to 9:15. Yeah, it's off now, so it doesn't matter to us anymore. Sorry, London market or whoever put that on. They're just screwing with the bots. It's what they do. Good morning to Will. ET1 says, keep pushing through, Big C. Oh, that's funny. I keep pushing. I always keep pushing. I don't have another choice. Keep pushing. Bam, 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 bam. Push it real good. He says, let's talk about sweeps and absorption. So we talked about stops, right? The market loves to go take out stops. And there's always a question once it takes out the stops. So let's say it's going to come down towards the overnight low to take out buyers, right? So they're trying to take out longs by going down. What they're essentially doing is they're getting a bunch of shorts, down here as they take out those stops. So the question becomes, do buyers step in after that happens? So they come down, boop, boop, boop. They take out all the stops. Do buyers step in at that point and turn around and take the market back up? If they do, that's absorption. Okay. That increases the odds. The momentum is about to flip from down to up. Or do they take out those stops, boop, 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 and then you get new selling. You get resistance down there. Well, that's bearish and tells you the market is going to continue lower. So you always want to know, where are the stops getting taken out? Where are those areas where they sweep the order books? They just poke through a level purely to take out stops, because that's what gives you an idea of something might change at this very moment. One thing I use for that I absolutely love is this indicator right here. This is the volume pressure imbalance on the market pulse. And basically what it is doing is it is just measuring when, like, at this exact moment, a majority of the liquidity is long or short. And so if it gets to the point where it's above 95%, which is only going to happen when they're sweeping the order books. The only time you're ever going to have 95% of the orders at this moment be all long or all short is when you're sweeping the order books. Okay. That's just the way it works. So when I hear this click noise, it's set to make a little clicking noise. Click, 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 click. When it crosses that 95% threshold, when I hear that clicking noise, I know, pay attention. Something's about to happen. Now, let's say it pushes down and it takes out stops. I hear that click noise, click, 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 click. That doesn't necessarily mean the market's going to reverse and come up. It could keep selling off, but that's the moment to pay attention, because that's the moment where we're either going to get that new selling or that absorption and turn around and head back up. So, especially later on in the day when I'm kind of like, I have my charts open on this computer and I'm just kind of messing around watching YouTube videos or whatever, just killing time over here on this computer. If I start to hear that click, 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 boom, my eyes instantly shift and I start looking at what's going on, because this might be a moment where something's going to change. If I'm in a trade, maybe this is the moment I want to move my stop, or maybe this is the moment I want to decide to exit at market. Or if I'm not in a trade, maybe this is a moment to start looking for what's my next trade. Something just changed in the market. So that volume pressure imbalance is really helpful. All right, the market is open. We opened below the base of the spike up. That is neutral on the day. That increases the odds. We need to come down here to the overnight low, 69.21, to take out the stops, as we just discussed. So that is the first move I'm expecting for the market, 69.21. Then we'll watch for that new selling down there. If we get new selling, we're bearish for further downside continuation. If we just find support and reverse back up, we are set up for a choppy sideways morning. I will not be able to get bullish again unless we get above 69.41 and get new buying up there. To me right now, I think we're probably going to start going sideways. Okay. And it's going to be a choppy morning. So brace for chop. That's what I say. And you say, but Charles, shouldn't you just be bearish? The market is going down. Shouldn't you just be thinking that we're going to crash and burn all day? Well, no, because we still got that iceberg up at 69.40. So even if we head down and we poke below this overnight low and we start to take out stops down here, we know there's liquidity up at 40. The market's going to want to turn around and come back up for it. So we shouldn't be bearish beyond that overnight low. We should be waiting to see what happens. Okay. So we're back through the opening price. Again, I see this as choppy, not bullish, but they do want to come up and kiss this iceberg. What happens once they do? Does it fill and then it reverses and comes back down? Or do we start to get new buying above it? Okay, so they wanted 100 contracts. Did we know that before? No, but we knew they wanted more. So they just got fully filled. They got their 100 contracts. So that magnet to the upside is gone now. So for the market to keep going up from here, we got to bring in new buyers. We got to convince people to go long. Okay, so now we're right back at the opening price. If they can bounce right now, it'll be bullish, and we'll be looking to test Friday's closing price at 49. If they cross through the opening price, we'll look for a pullback down towards the overnight low, 69.21. We are starting to bring in new buyers. The question is, can they hold it? Can they stay above that opening price? They cross back through, Everyone that's going long right now will be fixing to get squeezed. Remember, the market is just hunting for liquidity. It doesn't care. It'll go up and down a million times. As long as it keeps getting people to go long up here and able to stop them out by coming back down, it'll just keep doing that. So we are bullish above the opening price. And if they cross through it, looking for a pullback to 69.21. Can the buyers hold it? Okay, so now as we cross through the opening price, what do we know? Uh-oh, a bunch of people just went long up here, right? So where are their stops? They're probably all tucked in down here. So now the market wants to come back and clean up those stops. Market's like, oh yeah, Charles, watch this. The moment you say it, we're going to reverse. Chop, chop, chop all morning long. Squeeze the sellers while I sing this song. Somebody's going long at market here. So what did we talk about before? If they're poking up and taking out stops, they're going to keep going. Took out 83 stops on the first poke, took out 69 on the next. So they'll make another poke. If it can't take out another set of stops, they'll turn around and come down. If it can, they will just keep pushing it higher. This is an example of an iceberg canceling. We talked about sometimes they just change their mind. You see how they had that line and then it just stops without price getting to it? They just turned off that iceberg. So that's an important thing. If you were going short because you thought we were going to come back for that iceberg, you'd want to go ahead and lock in profits or at least move your stop below your entry. Of course, you'd have to be a scalper for that, but just as an example. Another person going long at market. Somebody's trying to pump this market higher. How do I know somebody went long at market? Because of this volume dot right here. That green dot that you see, that is basically measuring the amount of buyers versus the amount of sellers. It's a delta. Okay. So when it's green, it means you had more buyers than you had sellers. And if it's large, it means you had way more buyers than sellers. If it's small, you had a few more buyers than sellers. Okay. So when you see a green dot at a high, that's sellers getting stopped out. But when you see a green dot at a low, that's new buyers entering at market. Somebody just hit the button and just got long way more contracts than we're going short. That's what gives you that little pop, that little move up afterward, because suddenly there was way more liquidity on the long side than the short. So this is new buying above the base of the spike from yesterday. So the market is bullish. Same as I said before, our stop is that opening price. They got to stay above it. And we are now looking to hold support around 69.41. And we're looking for resistance around 69.60 to get that pullback. We can see we have that volume node right there from yesterday and from over the weekend. That's where the sellers should be waiting to smack this thing back down. ET says, we should remember not just price discovery and momentum towards liquidity with less resistance, but the loss of liquidity if price continues in a given direction. Yes. So there's multiple different like sort of time frames to think about it. If you're a really short-term trader, like you're a scalper, you're a day trader who only sits in trades for an hour at the most, if you're kind of in that time range, yes, liquidity is everything. It is the main reason the market makes the little moves that it makes. The bigger moves is another conversation, but the little moves up and down and up and down and up and down each day, intraday, it's all about liquidity. And so changes in liquidity show you what the market is going to do next. So if we look at liquidity so far this morning, since market open, this is a major bit of liquidity that they put in right here. Market had a bounce. It started to come back down, and then they started to really stack it in there and make it dark red. And so what did the market start to do? It started to push away. Well, then they started to add liquidity above, which was pushing the market down. So now we were stuck, in between these two nodes of liquidity. Well, the market came back up and it filled that liquidity, but kept going. So the market is pushing up into the liquidity above right now, and it's pushing away from the liquidity below. So if one of those stops being there and disappears, the market's going to stop doing what it's doing right now. So this stacking, let me change colors here. This stacking of the liquidity above price, if that suddenly stops, if they stop adding more liquidity above price, once we come through the next one, that's a sign we're done going up. If this suddenly disappears, that's a sign we're ready to reverse and come down. Changes in liquidity let us know what the changes, might be. And you don't always know 100% for sure what's going to happen, but something is going to happen when those liquidity, when things change with liquidity, when it gets pulled. Because there's just a ton of high frequency bots that trade this market all day, every day based purely on liquidity. So as soon as there's a change in liquidity, those bots recalculate and start doing things differently. I think the market has one more poke to the upside here, again, towards 60, but I do think we're going to run out of steam there. Why? Because of the taper. See how we're starting to taper off at the high? Less and less volume. That's a sign that sellers are starting to step in. Now, it hasn't been enough sellers to reverse us yet, but they're starting to step in here. So if this node of liquidity is our magnet right now, what happens when that gets filled? Dope Angel says, can we look at the NQ? Yes, we will in just 2 minutes. Let me just see what the market does here at 60 first. Then we'll switch away. I can't look away, Dope Angel. I can't do it. I don't have the power. Are you guys seeing that something has changed this time? All these other nodes of liquidity, the one in here, in here, in here, they've all stayed there. Well, not that one, but all the others have stayed there until price poked into it. This one keeps trying to disappear as price is coming up to it. You know what I mean? So it's like those little day trading bots like, boop, 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 oh, never mind, boop, oh, never mind, boop, oh, never mind, because they just keep pulling it and then adding it again and then pulling it. There they go. They're adding it again now. So I really think this is going to be our resistance. But we haven't poked it yet. See, gone again. Starts to go down, they'll start to add it again. In and out, in and out, in and out. And you say, man, look at how fast that's changing. Contract's there, contract's gone, there, gone, there, gone, there, gone, there, gone, there, gone, in a fraction of a second. Man, these human beings, they sure have fast little fingers to be adding and pulling orders that quick. What if it's not humans? What if it's just computers trading against other computers? All right, let's poke over and take a quick look at the NQ. Oh, man, NQ looks the same as the ES for once. Finally, finally, they're doing something together. Yeah, so same exact story from the NQ. You're dancing right on that balance or that spike up right now. So if that holds as support, you're looking to head to the overnight high, 25,226. If that does not hold as support, you're looking to test the half back, 25,074. And if that can't hold, then it's bearish to come back down to the overnight low. The difference between the ES and the NQ is the NQ already went down to the overnight low. That's what I was predicting would happen on the ES this morning, that it would first poke down, sweep out, some stops down there, then turn around and come back up. They already did that on the NQ. So the NQ should be able to keep momentum going here. And you're looking for support literally right now or at 25,070. And again, bullish above the opening price, bearish below it for a pullback. Okay, so here's that pullback on the ES. They got to turn this into support right here around 41 if they want to keep this momentum going. If not, I'm afraid we're in for a choppy morning. Testing the base of the spike, round 2. Can they hold it? Dun dun. Dun dun. In the city, you must fight to survive. If the buyers can't hold the support, they'll get squeezed. I'm going to say his name all wrong. Marguni says, is silver going to go up or down? What's the future look like? Sorry, brother. I tried to play that game a few weeks ago, making predictions about silver, but it's just not my market. I don't trade it. So I don't have any edge there. I cannot predict whether it's going to go up or down. I can give you a basic TA read of it, but you got to be an expert on a market and how it moves if you're going to trade it. Otherwise, you're just gambling, right? I don't need the weekly. Let me look at the daily. There we go. Nope, not far enough for me to buy the dip. So this is the area I'm looking at. The little gap in the futures there. That's very interesting to me. Let me go to spot silver. Jesus Christ. Okay, so you could look at this area right here as a short-term balance area for silver, okay? And you could say once you re-entered that area, you got a look below and fail. Do you see that? The market got below that previous balance area and it found support. So what did it do? It immediately turned around and rotated back up to the high. It broke out of that balance. It got the extension you would expect on the breakout, but when it came back, it did not turn it into support. So that tells you the market needs to continue to balance in this area. So right now, then what happened again? Another look below, another fail, but right now you're back at that balance area high right here around 81. So to me, this is not a time to long silver. The way I would play it is I would either say this is a time to be shorting silver, looking for the move back down to that balance area low again, or I would wait for it to break above like it did here, come back down and turn it into support. Once you see the support there, then you're bullish for the next move up. Okay. But right now, it's just kind of balancing inside this area. Okay. And so you should assume it's going to keep doing that until it's ready to break out, find support, and continue higher. But take that with a grain of salt. ET says, in other words, delta imbalance, a lot of liquidity, volume, sitting orders, positions, closing. It's not all new opening positions. Correct. Yeah. So for example, if you see an iceberg, that could be somebody getting long. It could also be somebody taking profits on a short. You know what I mean? Like you don't know. And technically, even if you see a stop, some people enter trades with stops. Right. So some people might say, listen, I don't trust this momentum. Right now we're holding above the opening price, but I don't trust it. I think what's going to happen is we're going to come through the opening price and then head to the overnight low. So they may just put a stop. They're flat right now, but they put a stop sell order at that opening price so that as the market crosses through, they get into it. That would show up as stops being taken out. But it might not be. It might be somebody entering their next trade. So you never really know for sure. But the problem is, if you try to make it too complicated, you're just going to feel confused all the time. So my framework is I kind of do always think about everything as if it's new positions, because it allows me to make sense of things. And maybe I'm wrong, but that's okay. If I'm wrong, I take a trade, I get stopped out, I lose 2% of my account, and who cares? I take the next trade and I make that money back. I don't mind being wrong, but I do need to have some sort of way to make sense of the market. Otherwise, I'm going to be confused all the time. So that's the hardest thing about teaching people how to do TA is everybody wants TA to work in a literal way, but the market is too random. There's too many different mechanisms constantly having effect. Who are the bots, air quotes, that are trading right now? Some of them are high frequency bots. They're just bots that are going to get in a trade, take profits 2 or 3 points later. Some of them are arbitrage bots. They're just bots that pay attention to the way Apple moves or Facebook or the SPY. And they're just adjusting with futures to keep up with that arbitrage between the two markets, right? Some of them are options market makers that are using bots to keep themselves hedged for the positions that they've sold in the options market. I mean, there's just so many different things happening at once. And so if you're being honest with yourself, it's all totally random. It's always all totally random. And so how do you trade that, right? In a way that gives you consistency, where day in and day out, you can have consistent results. Well, you've got to take all that randomness and you've got to find a way to understand it, find a way to make sense of it in your brain. If you're a mathematician, you're building advanced algorithm models that are doing this and that's how you're doing it. But if you're like me, and you're just a discretionary day trader, you need a story to make sense of it. You need an explanation of what's happening. And again, it's fine if your explanation is wrong, because all that happens is you get taken out of a trade. And if every time you take a trade, your rewards are significantly more than your losses. So let's say every trade you take, you risk 2% of your account size. And every trade you take, your reward, your target, is at least double wherever your stop is. That means each time you're wrong, you're going to lose 2% of your account, but each time you're right, you're going to make at least 4% of your account. Okay? And if you keep doing that trade after trade after trade for days, for weeks, for months, for years, every time, you only have to be right 40% of the time to be a profitable trader. So you don't even have to be right half the time. You can be right less than half the time and still make money and still be profitable. But how are you going to do that if you just feel confused all the time? So you give yourself a story, and the story makes sense of the market and it tells you how to execute your trades. And then you manage your risk. You make sure that you're always risking 2% so that you never lose more than 2% in a trade. And you make sure that your rewards are always at least double your risk so that when you're right, you make that 4%. So that your winners can pay for your losers. That's risk management. That has nothing to do with reading a chart. That has nothing to do with deciding if you think the market is going to go up or down. And when you combined all those different elements together, suddenly you have an ability to get consistent results, no matter how crazy the market is, no matter how choppy and confusing. Even if you're wrong, you can still make consistent results because you're managing your risk properly. Listen, I teach all of this in detail in my Mastery of Markets and Mind workshop, which literally starts in an hour, 1 hour from now. So if you are thinking, man, I'd really love to be able to give the market a story that I can follow and take trades and have a system that guarantees as long as I'm right 40% of the time, I'll be profitable, you should join this workshop. You got to sign up literally right now because it starts in an hour, and I'll need some time to send you the email to be able to join the Zoom call. Okay. So it's now or never, folks. Sign up or forever hold your peace, or at least until this summer when I teach the next one. All right, guys. So as far as my carry forward here, we're at the end of the stream for Bookmap. So what do I think is going to happen the rest of the day? I'm reading chop. I'm reading a choppy sideways day. At this moment, it is still bullish because what did we talk about this morning? If they can get back above the base of the spike and they can stay above the base of the spike, they can keep the market going at the very least to get to yesterday's high. Okay. And so far we are doing that. We got above it and we held it by the hair on our chinny chin. So if we can keep holding it, the market will continue up to yesterday's high. But to me, it's feeling like 5 minutes from now, 10 minutes from now, at some point in the near future, we're going to flush through this and then it'll just be a choppy sideways day from there. Okay. So we're bullish for now. And we agreed at the start of this stream, we were going to take the market one tick at a time. We weren't going to try to predict longer term outcomes. So I'm cheating by predicting the longer term outcome will be a sideways choppy day. But for now, it's bullish as long as they can hold this area around 69.40. Okay. With that, I will say goodbye and head on over to the private stream for the brigade members. If you are a member of the brigade, let us set sail onto the ocean of profits. For the rest of you, we will see you here next Monday morning. Have a great week, everyone. Okay, thanks. Bye.